Okay, so today's chapter is on forecasting. All right, we are going to look at this chapter. And again, while we refer to this, right, we're looking at the notes, the slides, and then also the study guide together at the same time. Okay, so forecasting, we're trying to know things in advance. We don't know exactly how it's going to be, but we have to sort of forecast for different reasons, right? Let's say, don't look at the content first. Let's say on a day-to-day basis, right? Are we exposed to any kinds of forecasting, or are we doing any forecasting ourselves in your daily life? Okay, nothing to do with business. In your daily life. Such as such as weather forecasting. Okay. So let's say before we head out, right? Then we will see the weather for today. So what's the weather for Singapore? 31 degrees Celsius. It's probably going to rain, and they're forecasted for the next few days, right? I think yesterday was Tuesday. Tuesday early morning about 3, 4 a.m. Not sure if you guys experienced that. It was a very heavy rain where I was, right? Suddenly I woke up like, wow, pouring rain, huge wind. It felt like I was overseas. Like it lasted for a few hours, then don't have already. Then I realized you're in Singapore. Super hot actually. Okay, so forecasting for weather, that's one, right? Let's say in the context of businesses, okay? From chapter one, we know that there are different functions, right, of business or different departments, such as, let's say in an organization with different departments, okay? One of them, HR, human resource. Anything else? Marketing, finance, wow, logistics, okay. Let's say for finance, any forecasting that they need to do. Okay, one example?
So next financial year planning.
Financial year planning?
Mostly have so for instance, if they food production for this month,
Uh-huh.
and they have to know.
Okay. Anything to do with marketing? Forecasting. Sorry? Stock price. Okay, stock price would be on the finance side. So that means outside of organization, let's say as an investor, I may be forecasting the stock price. Okay, that could be possible. Marketing?
Marketing will be predicting the customer's future taste and preference changes.
Okay.
Forecasting how much are we going to spend on marketing for the next quarter.
Okay, that's possible. Okay,
Demands.
from the customers.
Yes.
Okay, all right. Okay, great. So all these are the different things that we are forecasting, right? So as they mentioned here, we are trying to guess, we are trying to make an estimated, clever or educated estimate as to the future value of a variable. Okay, then here it's about making informed decisions. So then again, if we gave all these examples just now, right, forecasting about different things, and we're supposed to make an informed decision because we're not supposed to guess, right? If you guess, that's quite useless. It's not that useful. So it says here to make an informed decision. So what are we actually using? One more time. So so it says to make an informed decision. Informed, that means there must be something helping us decide, right? I cannot just ask you, hey, what do you think, how many customers will come to the bank downstairs today? And then you just give me 500. It may be true, probably it wouldn't be true. So that would just be a random guess, but we don't want that. So they say here they need an informed decision. Let's say for business context, let's say for weather context, they can't just tell today in Singapore it will snow.
Yeah, based on the information from the
Past, right? Okay, the past data. So we'll talk about how to sieve through the information later, the data itself, just so that we can project this into the future. So long range, wait, let me see if I miss anything. Oh, okay. So long range and short range of the forecasting also. So long range and short range here, right? This one is about how long in the future it's for. Let's say today we want to forecast into next week, right? Let's say here they have the weather forecast for the next week versus, let's say now I were to key in weather Singapore for, let's say, December. Okay, this is for this year's December. One is a shorter term forecast. This one here is slightly longer term. Okay, December this year versus next week. Any differences between both?
So comparing to the short term, long term will not be more accurate actually.
Okay, because
In the view of weather actually. I'm just saying.
okay, generally, yeah.
When we have more data
Ah,
and the future data cannot be predicted accurately also. Cannot be accurate.
because as in what? So future data, that means let me see if I understand you correctly. Huh? So that means you're saying, so you guys were saying like what happened in the future may be subjected to more changes, right? That's what she was saying. Then predict accurately, that means similar? Is this a similar way of saying? Or okay.
Because when we have the past data,
Ah.
we cannot have the past data only to forecast the future data actually.
Okay.
It cannot be similar. It cannot be accurate actually.
Okay, so it wouldn't be exactly the same.
Changes.
So changes, right? Okay. So here between long term and short term, as you guys said correctly, long term they're subjected to more changes because of different factors that could occur along the way, right? Short term itself, it's probably going to be more accurate because the likelihood of changes happening, it's going to be lower. Okay, so you guys know, huh? This one all you answered. So I didn't say much. All your answers. All right. So this one they give the examples. You can take a look, right? This one nothing much to memorize. If the questioner is kind, okay, let me see if okay. If the questioner is kind, it may ask you to explain some examples of forecasting done by different departments. Okay, then that's where you can use the information, right? If the question is kind and easier. Okay, but I'll go back and check. So we'll change the question because based on the responses, then we gauge, okay, how ready or which part you're familiar with, right? Then we'll skip all those parts. So the questions will be set in advance, probably a few weeks before we start class. Then we come to class, then gauge the response. Then after we go back, change the question. Then no one will answer the question anymore. Okay, so here it's that we assume that there's a causal system, past into the future. It is rarely perfect. It is more accurate for groups and versus individuals. Then it decreases as time horizon increases. This one's straightforward, right? Now, in terms of this, okay, it assumes a causal system, the past into the future. So it's a bit interesting because this relationship may work in some cases, it may not, right? Let's say it's moving into quarter 4 soon. Okay, now it's third quarter, right? It's September, and then we're moving on to fourth quarter, October, November, December. And we are trying to forecast the sales level. Okay, I think like previous class we mentioned this before, right? If you were with me. Let's say here we look at Amazon. Okay, so we've been looking at Amazon. So let's say now we shop, right? And then we buy things, sell things. So let's say if we were to guess, right? Just a guess, which quarter would have the highest sales? Which quarter? So sorry,
October,
end of the year?
end
End of the year, right? End of the year. So coming soon.
Yes.
So Christmas, right? People in a festive mood, they will buy presents and so on. So it probably will be like that. And this year, fourth quarter is coming soon. Are we likely to see the same thing happening? Probably, right? Probably. Okay. So that means we are using the past to forecast the future. Because many years before, right, December, or let's say the last 3 months of the year, they have been the most profitable for Amazon. And then probably it will happen again and again and again, right? Unless something happens. Oh, the website shuts down, cannot operate. Okay, then for that year, probably it wouldn't happen. Okay, but this one probably will happen. So I'm going to see a causal relationship. It's going to go from the past into the future, right? So it's going to repeat and repeat and repeat. Now, let's say we look at another example here with the case of any company that you like, any US listed company. We did for the assignment, right? If you guys were here in May, any company, listed company, US listed company that you know of. Sorry? Wow, how to spell? ZA. This one. Okay. Hey, this one is listed, right? Okay, never mind. Okay. So here. Okay. This one, the price is 220, right? You can see here at the closing last night. Apple's price closed at 220. And then after that, moving into like today morning, okay, because this is US timing, right? And then we convert over to Singapore time. So this will be 4 a.m. Singapore time. This is about roughly 8 a.m. Singapore time. Okay, so this morning. So after the market closed, it sort of still moved a bit. So right now it's about 200 to 219 around there. But what would be the price tonight?
Price for what?
Apple tonight. So okay, you have one day. This is the, let's say it shows no, this one is the closing price. Then after market closes, there is still some light trading. So the prices stopped at about 219 at about 8 a.m. Singapore time. Okay, so this is where market has already closed. It's just very light trading. So last 5 days, right, this is the movement. And then last 3 months, this is the movement. So the next question is, we have the data here, right? This is the data. Okay, I can change for you. You need 6 months, 1 year, 5 years, anything. What would the price be tonight?
At the opening price.
Okay, opening price or closing price. Or let's say the range.
So this is pretty technical, actually. Of course, I don't do stocks,
Yeah.
but there is a way that you can calculate the tops and the bottoms.
Okay. Okay.
And from that data, you extract
Okay.
how's it gonna be.
Okay.
That's-
Then, okay, so let's say now we use this, right? Then going to forecast a bit. But let's say now tonight, Apple's, sorry, around 218. Really? Just now for Amazon, we could get an answer quite straightforward, right? So I ask you when's the highest sales, and then you guys are, yeah, probably fourth quarter. All right. This one, question mark. Okay, so we can try to guess, or we can try to use different methods, right? All the methods probably work, but it will give us different answers, right? I can use 5-day chart. I can find something, and then, okay, I'll project, let's say tonight, 220, right? I can use 3-month chart, and then probably I'll say tonight, 225. Wrong, right? No correct answer. Okay, so in this case, then the relationship here, the past and the present, may not be that strong. All right. Okay, so Jason, just to get us thinking now. So when we forecast, there will always be some degree of inaccuracy, right? Because we are not in the present, right? And it hasn't happened yet. Okay, and to forecast so exactly, it's probably going to be very difficult, right? Like, we're going to say Amazon will be earning $3,015.86 this quarter. Very hard, right? Probably can forecast 3 million to 4 million, right? We can give a range, okay? Plus minus a bit of allowance. All right, questions? Quite easy, right? Okay. Okay, so these are the elements of a good forecast. So this part here, a bit more content. This is where we can test on the essay questions. Okay, now again, this only gives us all the nice pictures and the building blocks. So the full write-up is provided here. Okay, timely, accurate, reliable, etc. All right, so this one is already highlighted all the keywords, right? But if you want to, you can highlight this portion so that you know, study more for the essay. Essay, how many marks? How many marks? I also don't know. Okay, so essays, 10 marks. All right, 4 points. So then we need a lot of things to write. So one of the things to test will be from here. What do we need to have for a good forecast? So for example, it has to be timely. So looking at this, let's say we look at the Singapore's weather here. Okay, this is for December 2024, right? Now is January 2025. Would this be useful to you? Again, one more time. This forecast is for December 2024. Okay, you can see here, right? 2024, last month. Now it's January 2025.
Yes.
Do you need this?
No.
Okay, it's a very strong response. Okay, so that is no longer timely, right? Because it has been over already. So we need it to be in time so that you can take action. Okay, so it has to be in time. Next part here, it has to be accurate. Okay, accurate.
Right?
Sorry?
None of it's
Relevant.
timely and reliable can be
Yes.
next.
Yeah, you can mention that. So you can write. Okay, so accurate. Let's say today, coming back to this example of the price. Okay, so if you look at the stocks, right, depending on the different ways that you invest in, some of us may look at the analyst, right? So we can say that, oh, analysts forecasted or they project that the fair value, you may heard of this, the fair value, the right price of Apple could be 230. Okay, let's say, right? You look at the analyst report, it says that the fair value is 230. So based on his understanding, right now is considered cheap because 230 is the right price. And currently is only at 220, 219. Usually, every, let's say, few months, he'll provide his forecast. Let's say this person, this analyst called Mr. Tan. So read his forecast and he usually is wrong. Okay, let's say every month he provides his forecast, right? And then the last time he said that let's say Tesla is worth $100, right? And we look at Tesla. Tesla price is now about 226. Okay, the last. So he said that Tesla is only worth $100. It will crash. It will go to 100. It will stay below 100, right? And so far, it hasn't really happened. Okay, so it's 200 plus, 170 plus, 6 months. Lowest was about 140. It has never gone below 100. Okay, so it's quite wrong, right? It's quite wrong. So probably his accuracy is about, he's 80% of the time wrong. Okay, so this is one person, huh? Another person, he's 50-50. Sometimes he's correct, sometimes he's wrong. Okay, you know what I'm saying, right? My story. Okay, one more time. First analyst, he's 80% of the time wrong. Let's say, for example, he said Tesla should be worth 100. It will crash. Another analyst, 50% time correct, 50% of the time wrong. So half-half. Okay, which one will you trust? 50-50, 80-20. 80% of the time his reports are wrong. 20% of the time he is right. 50-50, 50-50, 50-50. No one choose the other one.
I won't trust, but yeah.
Okay. The interesting is, all right, let's say here we want something to be accurate, right? Accurate, that means I tell you this, it's probably going to happen. Okay, it's probably going to happen. So then, if we think about it, 50-50 means I follow him as half of the time he's probably going to be wrong. So you say it's going to go up. 50% chance it will drop. If I go against him, then there's also a 50% chance I will be wrong. Do you understand what I'm saying? Right? If I follow the other one, because it's 80% of the time wrong, I just go against him, right? Then there's a higher chance that I will be right. Correct? Okay, no right or wrong, because stock price, it's chaotic. Okay, because people are coming in every day to trade, right? There's the big companies, the institutions, there are people like us, and people come in with different mindsets, different perspective. Today I buy, I want to hold for 5 years. So I'm okay with whatever price. Yet today he buys, he just wants to do a quick in out. So then he's very particular about the price he enters and exits. And they are all trading at the same time on the same day. Okay, with different motives. So then the price can be fluctuating quite a lot. Questions? Questions? Okay, so here accuracy, okay. Based on the basic understanding, accuracy, yes, it has to give you the right thing, right? But I can give you the wrong thing and I'm 100% of the time wrong. So like all the time I tell you something, it's going to be wrong. Tomorrow will snow. Okay, then I tell you, tomorrow Apple's price will be $5, right? Then you're never going to follow me because I'm so accurate, right? In the sense, because I'm 100% of the time wrong. Okay, then you go against me, just don't follow me. All right, so that's accuracy. Okay, reliable. Reliable here, they say that it has to be using a technique that is correct, that is recognized. Okay, so we look at the technique later, right? How to get the data. So now it's looking at the data to make the forecast first. Okay, so the forecast, again, it has to be in time, it has to be accurate, it has to use a good method. Again, I cannot come to you and I just tell you, I'm working in this company, right? I'm the manager of the restaurant, for example. So I'm sort of like, I'm a staff. I know day in, day out how many people come. And tell you tomorrow, okay, I think there'll only be 200 customers today. Okay, one more time, huh? So I'm the restaurant manager, right? I come to you, you're my supervisor, and tell you, I think there's only about 200 customers today, right? For the whole day. That's my forecast. So it could be timely. It could be timely because I tell you in time, right? The day hasn't finished. But how did I get this method? Well, because I guessed. Then you wouldn't trust, right? Because the technique itself is not reliable. So the technique has to be something reliable, recognized. Okay, next one. Meaningful and writing. Okay, meaningful. Okay, meaningful just says that it has to be in certain units. Okay, like how many people are coming, how much money are you earning, how many units will be produced. Okay, that's all, right? Nothing much. Then it should be right. So this is to make it formal, right? And then there's some sort of a record. And the last part here, it should be simple to understand and to use. Okay, if it's too complicated, then you wouldn't understand, right? I can give you a very difficult method. I can tell you all the different technical terms. You don't understand what I'm saying, then you're not able to use the data, right? Let's say today you are the manager and you want to know the production forecast. So I just come to you and say, hey, the forecast for next month is 10,000 units. Full stop. Can understand? Can understand? Our forecast for the next month is 10,000 units. Make sense to you? Yes, right? Okay, just like that. Simple. Okay. So full marks for the exam, huh? Because it's so easy. Okay, and the last part here, it should be cheap. Okay, it should be cost effective. Now we look at this, okay, we look at this and, okay, never mind. Okay, let's say we look at this example. I want to know the tastes and preferences of the customers. Okay, I want to see what people want to buy and I want to find out what I can sell them to make money. So now I'm going to the streets and then I'm going to give survey forms. So we go to the streets, we give survey forms. So one by one, hey, I want to ask you this, I want to ask you this, right? At the end of, let's say, 6 months, I spend about $3 million just to know how much people are willing to spend, how much people earn, what are they willing to buy. Would this be a good technique? Okay, one more time, okay? Because like everyone looking everywhere, right? I don't know. It's like very weak Wi-Fi. We feel we're connected, but then after a while, like, no one looking at me. Weak Wi-Fi. So one more time. Let's say today I do a forecast, right? We plan ahead. So it is timely. I give you in time. It should be accurate. We ask the customers on the streets. It should be reliable because we ask them themselves. Then the next thing is it took us 6 months. We interviewed like 1 million people, right? We hired tens of thousands of the interviewers, go to the street, do the survey form. So it costs about $30 million to understand their taste.
It's not right. It should be
so expensive, right? Okay, so it shouldn't be so expensive. The benefits should outweigh the cost. Okay, so just to sum up, these are the few characteristics of a good forecast. Okay, probably some will be quite easy to ask already. You probably can say some yourself. So you can read through, then you can still add on a few more other points that may not be familiar to you. Let's say, for example, I know that it has to be timely. I know that it has to be accurate, right? But maybe I didn't know that it has to be meaningful units. I didn't realize that it has to be simple to understand. So then read the extra 2-3 points because essays, we don't know how they'll ask. Okay? Huh? I really cannot remember the question. I really cannot remember. I have to go and check, but I probably will change. Okay, all right, let's look at this.
Ed, I mean, really not just Rivian, but that whole EV space just on a tear recently in the stock market. What's going on? Ed, I mean, really not just Rivian, but that whole EV space just on a tear recently in the stock market. What's going on?
Yeah, I mean, today's driver was a note from Wedbush analyst Dan Ives, who raised his bull case price target on Tesla to $1,000. And he's calling this an inflection point for EV demand. He sees EV demand really taking off over the next 18 months to 2 years, hitting 10% of new passenger car sales by around 2025. But what's so interesting, think about the big picture here. You see on your screen there where we are, the blue bars are battery electric vehicle sales. They are a tiny proportion of all the cars sold all around the world. And it's not until 2040 that you see battery electric vehicles becoming 50% of new vehicle sales globally. So we have a long way still to go. That's Bloomberg New Energy Finance data that we're looking at there. But what we're seeing now is some optimism, some enthusiasm, and a change of psychology from investors who are not just looking at Tesla, the market incumbent, the market leader, but looking at these other startups and legacy players like General Motors and Ford and thinking that this is a good bet to make, that they are making progress on electrification and that they are addressing demand that is out there with new vehicles.
It's interesting when you talk about pickup trucks. We think of them as a higher margin, bigger business, maybe something that differentiates itself from a Tesla. What does an EV pickup truck mean to you?
Yeah, it's really interesting because here in America, there is a clear preference for the pickup truck or bigger vehicles. It's about 80% of vehicle sales in the US. But what's incredible, if you look across the models out there, particularly Tesla, but others like the Nissan Leaf, the Chevy Bolt, great cars, but they're not in line with the types of cars that Americans like to drive and Americans like to buy. And it's always puzzled me why there are not more bigger battery electric vehicles. And now in 2021 onwards, you see the likes of Ford, the likes of General Motors, Rivian, who I spoke to then, bringing electric pickup trucks to market. And if you look at Wall Street notes out there covering this space, you see some of the names there. They think that too will be a driver of consumer demand for these products. I always talk about price parity, but it's also about performance. Can your electric vehicle do the same thing that the gas equivalent that you've owned previously can do? And until that's the case, I don't think we'll see as much EV adoption, particularly here in the US, which has lagged behind other markets like China and Europe in terms of electrification.
Ed, we only have about a minute left. And I think what struck me is earlier you're talking about Dan Ives of Wedbush and the price target upgrade from Tesla. You said $1,000, and it just struck me, this is on the post-stock split Tesla. I mean, so pre-stock split, this is a huge call. How do you think about what is really driving these further upgrades that we continue to see?
Yeah, I mean, Tesla may deliver 500,000 vehicles this year. By comparison, Toyota and VW will do 10 million cars apiece, admittedly not electric. I know Morgan Stanley now is looking beyond the vehicle, and they're looking at the kind of margins and top line growth that Tesla could see in software, for example, which is an area where they might lead in terms of robo-taxis and over-the-air updates. We know that other automakers are looking at that space as well. But in the future, there's all these other products that come along with electrification, that come with the increased computing capabilities of these cars. And there's a lot in the valuation that investors are assigning to companies like Tesla that goes just beyond producing cars with four wheels that drive using a battery electric powertrain.
Startups are becoming, I mean, really not just Rivian.
Okay, so this was a forecast for electric vehicle demand. This was about 3 years ago. Okay, and you can see that they showed such charts, right? 3 years ago was about 2021, okay, 2020-ish. So they show here how much was the battery EV demand across till about 2040. Okay, and they say that it's probably going to increase. So the demand for the EVs is going to rise as the years go by. Okay, so that's one example. Question? Okay, next part. So how are we going to do forecast? What is the technique that we're going to use? These are some of the things or some of the methods that we have. Okay, so the first one, we have the judgmental, which is getting the inputs from the people. So basically, this is what we talked about just now. I asked you for your opinions. What do you think is going to happen to the interest rate this month? Okay, if you know about the interest rate changes.
But it shouldn't be the operation related, because forecasting, cost forecasting, annual forecasting, right? So I don't know.
Coming to that later. Okay, so let's say here, first one, we have the judgmental analysis. This is to ask the opinions of people. What do you think about something? All right, so this is an example, a short video.
For next year, are you optimistic about the global economy or pessimistic?
Pessimistic.
Pessimistic.
Pessimistic about look, you have a political, you have a monetary, you have a conflict type of environment. At the same time, you have the greatest inventiveness. We talk about this fabulous technology development that has so much potential to produce wonderful things, and then it could be a problem. So if you take the time horizon, the monetary policies that we're going to see and so on will have greater effects on the world. And you look at the world gaps, so it's difficult to be optimistic on that. And I think now the real issue, I think, is how we deal with each other. It was said earlier very well, peace. If we can keep the peace, if we can have a healthy, competitive environment without having a war with each other, we will be in good shape. We will make adaptations.
So this was about 10 months ago. It's in the same year, right? If you're familiar with Ray Dalio, he operates a hedge fund. So they were asking him about the opinion.
Let's start off with the hand wringing over.
Okay, so you're asking
For next year, are you
about the economy and see what he said. So this would be an example of the judgmental forecast. Same thing here, let's say in the context of operations, right? We want to know how much to produce. We want to know about how many people to hire. So if we want something fast, so each of the technique, we have their own pros and cons. We want something fast. You can see here, we need quick decisions. We will need to actually get some answers fast. Then you can make use of this method. So how many units do you think will produce this month? how much sales do you think we will make next quarter? So this could be a very quick question and answer from the relevant person. All right, so here, this is one method. Okay, but of course, there are some problems. Okay, we add on to this. So first thing is we ask someone about their opinions. What do you think about this? Right? It can be a very fast response. You need not go through the whole sequence of like doing surveys, asking people one by one. It can save you a lot of time. But what are some potential problems with this method? Accuracy. How to
It's
explain?
not accurate.
Okay. Anything else? Like as in terms of explanation.
What's the issue with judgmental forecast?
Yes. So you're saying accuracy is a problem, right?
It's subjective, it's not objective. It's not
Okay.
based on real data.
Okay. So it's based on opinions. All right. Any other problems? Yes. Questions? Okay, break is coming soon, all right? Looks so sad. Okay, next one is time series forecast. So the first method, the first technique, right? Judgmental, we're asking about the inputs from people. Second method here is time series forecast. Okay, so if you've taken statistics, right? This one may be familiar. So time series here, the word time suggests that it is from the past into the future. All right, so we're using data from the past to project into the future. So for example, this one here, right? The exercise that we just did. So let's say now I look at the 6-month data, we could draw some trend lines. You can see that, let's say from around, when was this? This year, March, right? Till around here, now is September. Across the 6 months, there is an increasing trend throughout. So using that, we could forecast that Tesla is probably going to continue rising. True or not, we don't know. Okay, but let's say just using this method, time series, we use the previous data, we want to forecast into the future. So the last 6 months of data showed that even though there were ups and downs, generally it was on an upward trend. Or let's say we look at 1 year. Okay, or 1 year shows a different picture. 1 year, it was about, last year, September, it was about, where was this? 7.2. Now it's about 2.26. So if you use the 1 year data, there's a generally downward trend. So then the stock price could continue declining. Make sense? Okay. Again, there's no right or wrong because different data shows different things. 5 years, it's probably going to rise. 1 year, it has been going down. 6 months, it has been going up. Okay? All right. Okay. Any issues with the time series? Let's look at this. So any benefits, problems? So we're going to use the past data to forecast into the future. Along the way, there will be some fluctuations. You could still see a general trend, right? As what we have mentioned here just now. Same thing, you could find the data for, let's say, production levels, sales levels. In that case, using this method, could there be any benefits and problems that we face?
The benefits are mainly the experience. You can check the accuracy of this data.
Okay,
It
so
will be high.
can rely on
Reliable.
yes, data. So accuracy should be higher.
Problems is that you don't leave a margin for change. So for instance, you might think I will sell 100, depending on the data that I have before, I will sell 1,000 cars, right? So you might actually sell more. So you or sell less. So you must always have a margin for a negative or positive change, which is a margin of change. You have to take change into consideration. You should not be relying on this 100%.
Okay, so to summarize, past cannot predict the future.
Past can predict the future.
100% accurate.
We have to always know days on alert. So you have to always have like a margin, like a space for change, a space for calculating, right?
So the past.
So that's why we have now something like agile.
Give me a while, huh? Wait. So allows for change in the present. Okay, yes, you were saying?
That's why we have, back in the days, we used to have waterfall project management methodology, which is like, this was mostly used in not manufacturing, but it was used mostly like buildings and I'm sorry, I'm just trying to in construction. But now we have, for instance, the software industry, right, which has a lot of changes because customers have like different opinions, and they might imagine that this is going to look like that, and later it would be completely different when they see it, right? So the fact that change now is very important. Problems is that we might not take the factor of
Change into consideration. Okay, thank you. Okay, what if we had no data? Oh, okay.
That they get to finish this in iterations, right? So they don't have actually words. So they just go, and as they go, after like 2-3 word iterations, they now they can predict. Previously, they mostly were using judgmental.
Okay,
So
all right.
if we don't have secondary data in our hands and we are the place to generate primary data
Okay.
by having different techniques like survey, like judgmental, so like that, we should generate data action from the people. We should extract data from the people, and we should make it as the primary data for the future predictions and forecast.
Okay.
This
Wow.
is normal and outer layer of the explanation.
Okay, we are done for today. Have a good day.
Is related to this.
Okay.
But the thing is, if we forecast incorrectly,
Okay.
as for like, if we look into the sales aspect, if we are forecasting the sales to be less and unexpectedly the sales are high, we might not be prepared for it.
Okay.
You cannot
The
match the
stock.
supply and demand and so.
Yeah.
Okay.
Okay. Interesting.
As for the time series forecast, I think it's too dependent on the analytics.
Okay, so it's just on the numbers, but not like qualitative factors. Wow. You're all ready for
In that situation, we always have surplus products in our stocks, right? So that
okay.
we can
Even
manage the
surplus are not in it.
surplus also not in out of control.
Then too bad. Okay. So time series is one. The other one here, they use the name associative models. Another name you may have heard of, regression. So we're basically going to plot at least two variables together. So we have okay, never mind. Let's say, yeah, push this down. Okay, never mind, just verbally. So let's say today I want to lose my weight. Okay, I feel very fat, right? No lah. Okay. So let's say I feel very fat, all right, and I want to lose the weight. Okay, so first thing is before I find some methods, right, to lose weight, I need to know first what affects my weight. Right? I cannot just randomly do anything like, oh, okay, I'm going to be skinnier. Right? There must be some things that are more effective. So let's say now I don't know, right? I can go and test first. So what are some things that can affect the weight? Food. So food, calorie intake. Anything else? Exercise? Exercise. Okay. Anything else? One or two more? Mind control. Okay, interesting. Okay, mind control. Okay, the mindset. Last one. So whether you have diseases or not. Okay, all right. So four, right? Okay. So your calorie intake, the exercise, the mind control, and disease. Okay. So now we will have this, right? So weight here, this is what we are trying to reduce. And we plot this. Let's say we have the calorie intake, and we have exercise volume, then the mindset, then disease. So we could do this exercise, and then we are going to come up with this equation. So what it does here is we have weight, all right? We have weight. This we'll call a dependent variable. So it depends on the other variables on the other side of the equation. So weight here, we want to make it go down. What can affect the weight? These are the factors that we came up with. So this is the dependent variable. These are the independent variables. Now, correct or not, of course, you have to go through the whole like statistic exercise. But let's say now, why we include everything, right? Because at the first stage, all these are possible reasons. Then the next question is, are we able to put them into the formula? Let's say this, calorie intake, is it easy to calculate, to put into numbers?
Yes.
Probably yes, right? I ate chicken rice, I had pizza, ice cream, blah, blah, blah. 4,000 calories today. We're going to be like very fat. Okay, so this one, we can use the calorie intake. This one here, exercise volume. how are we going to quantify this? Time? Okay, time could be one. So let's say I exercise for 2 hours, 1 hour, half an hour, 5 minutes, 2 seconds. Okay, so we can use the time, right? Could there be other ways?
Calories.
Calories as well. Okay, so how much calories you burnt, right? Okay. So then you realize there are different ways of doing this, right? Okay. Let's say this mindset. How are we going to capture this information inside the equation? Okay. We have the quantitative variables. We have the quantitative variables. These are in numbers, right? 5,000 calories, 6 hours, 7 hours. Mindset, you cannot count, right? You cannot count. I have 2 mindsets today. 0 mindset today. I wasn't awake. Okay, but we can still categorize, right? Mindset can be positive, negative. Of course, you can have different categories, right? Positive, neutral, negative. Very positive, just positive. Also can, right? Okay, so see how you're going to categorize, and we can give it a number. Category 1, 1. Category 2, 2. So we just change the number here. Because the whole thing is involving numbers, right? You still have to give it a number. So in that case, this as a qualitative variable, you have to give it a category and give it an assigned number. Okay, this one we won't go into depth because it's for a statistics class. Okay, if you took quantitative methods, have? Don't have. Don't know what I'm talking about. Okay, all right, have fun, have fun. Okay, then disease or not? Again, same thing, disease probably, okay, one way,
Are you talking about quantitative and qualitative analysis?
sort of, different variables.
The topic comes under BRM, business research methods.
Uh-huh. Yeah.
Quantitative and
We
qualitative
started to
measures.
talk about weight, actually, like, how did that take kilograms?
Okay. So let's say disease, right? You mentioned disease. So it could be, let's say, certain diseases that can reduce your weight, right? Such as
Cancer.
Cancer? Okay. So let's say this person has cancer or not, or this person has cancer, diabetes, whatever diseases, then nothing. So again, because this, you can count how many disease, but probably are looking at the specific disease. And so we assign the group, and then there's a specific number as well. Okay, so this is how it works. Let's say we don't want so complicated, we just want to keep one of it. Okay, then what it does here is we have a weight affected by the calorie intake. Okay, so how the calorie intake changes will affect the weight itself. So coming back, let's say here, this one no issues with this regression, how it works. Okay, so let's say now come back here, we don't want to find weight anymore. Let's say we want to look at the sales figure, okay? We want to find, or we want to forecast the sales for quarter 4. Let's say this is for 4th quarter, Q4. What could potentially affect the sales? Demand? Okay. Demand, price, okay. One more. Okay. Okay, that could be, okay, let's say now spending on marketing, for example. Right? Possible? There could be no relationship, right? Just throwing things, something. So now it's brainstorming. Then after that, we can use the data to see if there's a relationship, right? So sales figure could be affected by the demand from customers. Do they want to buy? Are they facing any upcoming holidays? Right? Q4 holidays, people want to buy. Very happy, good mood holidays. Price. If we keep reducing the price, will it affect the sales? If we keep pushing down, will people buy more? Will people spend more? If the prices are higher, will the sales figure increase? Let's say if I spend more on marketing, are they going to buy more? Or if I don't spend on marketing, would it affect sales as well? Okay, so these are some of the ways to look at the forecasting. So first one, we are just asking about the opinions of the people. Second one, we make use of the previous data to go and see, right? Let's say in the past, what has happened, project into the future. So time series. Third one here, this, you can look at different variables. So the variables, of course, this is a bit tricky because they will have to come up with it themselves. So let's say now in the answer, right? Sorry, in the question. So the question, we have short answered question. Yeah, this one. Okay, we have short answered question, right? So it is 8 marks. So the question from this chapter may ask, let's say now you are tasked to design a regression, let's say project. Okay, you're going to forecast the sales for this restaurant. So come up with some variables yourself, explain how they could affect the sales. Then explain how the whole thing can go wrong. Okay, so possible question. Should be quite easy, right? Okay, then let's not ask this. So we went through the exercise, so we need to know, all right? So again, they could ask you to, we talk about the command word differences, right? The command word explain and discuss. Okay, so we went through, okay. So if they ask us to explain, then for example, for this portion, they could ask us, now we are trying to forecast the sales figure for this restaurant. Explain 3 variables that you can use for the regression. Okay, so explain factor 1, factor 2, factor 3, right? Then they ask you to discuss.
Introduction.
Yes, yes, that one for essay, okay. So they could ask us to discuss if this method is the best. Okay, one more time. Explain the 3 factors, then we have got this first method, second method, and third method. So we are talking about regression here for the question. They will ask us, discuss if this is the best technique to forecast for the restaurant. Full stop. Okay? So after you give the 3 variables, you need to talk about the good and the bad of this method. Then if they ask you if this is the best, you need to come up with something else. Sorry?
Examples?
Yes. Examples. Okay, so you can talk about time series. You can talk about judgmental. So we can compare. Because we ask if this is the best, right? Is this shirt the best to wear for tonight? So there must be something to compare, right? If this is the only shirt, of course it is the best. Because it's this or naked, right? So only this. Okay, so again, remember the 3, remember the pros and cons. That's why we talk about the good and bad, because you may need to compare. The question could ask you to give your opinions about the methods, explain how it works, or they give you the scenario. You are the analyst, you are the market researcher, whoever roles, you are supposed to use these methods. Okay? No calculation, just explain only. So you don't need the calculators. Yes.
How these topics related to operation management?
So this one is because we need to talk about the production level. We need to know how much to produce. So then linking that, so this is one part of it. So forecasting as in like knowing the supply demand numbers, matching, and then linking back to like the production. Okay, I was too excited and happy, right? I realized, okay, we finish this, then we go for a short break. Time flies when you're enjoying, right? Agree? Yeah, of course you agree, but not for this scenario. Yeah, when you're in, okay, now this one. You are tasked to provide a report detailing the forecasted demand for your company's vitamin pills for the next season. Explain how you carry out the analysis with one method and the pros and cons of it. Okay, so the command word here is to explain, which is a simpler one, and we are supposed to look at the context. All right, so it cannot be, okay, I can use this method and then these are the steps, finish. It has to be fitting with the context, which is the vitamin pills demand. Okay, so they forecast the demand. We want to know how much to produce, how much people may buy. So then what are we going to use? Which technique? First one, we can talk about the time series. This has different variations for the answer. Okay, so you can talk about time series, associative or regression. You can also mention judgmental. All right. So let's say we talk about time series, then they say, okay, we can use the data of the company, right, from the past season, past how many years to see the demand for this year. If there's any obvious pattern, this will be shown in the data. If it's new, then they can use the competitors' data as a proxy. So that's the suggested way. Then they also need the pros and the cons. All right. Now, this one is as a short answer question. Very short, right? Short answer question, this would be 8 marks. Essays would be 10 marks. Then for our case study, this is also sort of like short answer, just that they give you a story to read and you answer. So it's about 6 marks worth. So back to this, the length here is considered quite short for case studies. Okay, here, this one. So we have 5 questions, 6 marks each, about 2 stories to read. So the first story, one news article will be one story. Okay, for example, let's say, okay, let me see, there's any news. Okay, for example, let's say, okay, not, of course, not about this, right? So let's say this is one article, and then you all this. Then after you finish reading, then they'll ask you about 2 questions. All right, so about 2 questions. Then after that, the second article, it will also be around this length. After reading the whole thing, then the next 3 questions. Okay, so 2 questions, 3 questions. All right, that distribution. Okay, so where were we? Yeah, here.
But it will be related to the authorization.
Yes. Okay, so back to this. Okay, so we need one benefit and one problem. So benefit here, it is based on data, more objective. And the problem is it may not reflect the future, so there could be some inaccuracy involved. Okay. All right, so this is the rough structure. You can fill in with other points. You can explain further. You can give your own example. So for essay question in the exam, they will ask for examples, these 2. All right, so they may ask for specific examples. Using real world example, explain, blah, 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 discuss, blah, blah, blah. So the real world examples will have to be included. Okay, I have overstayed my... Now it's about 1:10, come back about 1:30. 1:30 will be fine. Okay, wow, the happiest. Okay, have a good rest. Good rest. Good rest. Not perfect, right? It could have been longer. Okay. Okay. What do we have? All right, we try this question then. Okay. This one is more a calculation, just for your understanding. So we have this, we try the questions to go through the concept, all right? Otherwise, if I explain to you, it gets a bit too down. So here we have this periods and the number of complaints. We have 5 periods. And they say to prepare a forecast for period 6 using each of these approaches. Okay, the answers are all there, right? So you don't have to copy anything, but this one just for understanding. So the question again, as we mentioned just now, there wouldn't be calculation, right? So you don't need a calculator. You don't need to calculate anything in the answer, but they may need you to explain. So from here, they could ask you, explain how we use the naive approach. Explain how we use the moving average. Explain how we use a weighted average. Okay, so you have to explain. They may ask you for the differences. They may ask you for pros and cons in the question. All right, short answer question. Okay, let's look at this. So let's say now we want to use the naive approach for period 6. So we have 5 periods. These are the number of complaints, and we want to see the forecast for period 6. So method 1, the naive approach, what we do here is we simply use from the previous period. Okay, so you see the term naive, right? So it's not going to be perfect. It's quite a foolish method, but it's very fast. So period 5, 64. Period 6, we assume should be the same. Okay. Right. No scientific methods here, no calculation, nothing. Right. Previous was 64. Next one might be 64. All right, it's just a forecast. Second one, we have to use the 3-period moving average. You know average, right? You know average. Okay. So the problem is the longer it gets, the data becomes quite outdated, right? Let's say today, for the same example on the stock market, okay? This one, okay, let's say for Tesla, we want to look at the forecast for tonight, or let's say the next 1 month. If you look at all the data from 5 years ago, it may not be relevant. Amazon sales figure, they want to forecast the sales for the next quarter, right? And you backtrack 20 years ago, 30 years ago, right? When they first started just selling ebooks, nothing else. Right? Amazon started with selling ebooks. So would that be very relevant? Probably not, right? So we assign weights. Okay, before that. Okay, before I get further. Okay, so we are going to use the more recent periods and the latest, right? So only this few. So let's say they mentioned that they need a 3-period moving average. So what happens here is we will use the most recent 3 periods, 3, 4, and 5. Okay, so 3, 4, and 5, we had 55, 58, 64. So we add up these 3 and we divided by 3. This will give us 59 for period 6. All right, for period 6. Okay, let's say we want to calculate for period 7. And we still need a 3-period moving average. Then which periods are we using? So for period 7, which are the periods that we are using?
Weight average, right?
No, the second one. So don't care about the weighted first. Okay, wait. So now we want to calculate for period 7. For period 6, we use 3, 4, 5. 6 hasn't happened yet. Okay, 6 hasn't happened yet. But we want to guess for 6. So we use 3, 4, 5. Let's say for 7.
We use the forecast that we already came up with for 6,
Okay.
along with 4 and 5.
Okay. So probably for 7, right? Let's say by 7, we may already have 6, right? So we can use the actual, or if it hasn't happened yet, the forecast. So 4, 5, and 6. Okay. So 3 period, right? 3 period. Why is it moving? Because as you go along in time, the period that you are using is also moving. That's why they call this the moving average. All right. So moving average. Why not just use the average? Average, that means from 1 to 5. Let's say now it's period 100. So we use from 1 to 99, okay? So that versus moving average.
Accuracy wise.
Okay, accuracy in terms of,
moving average is accurate because it's the latest data, right?
okay, okay. So more recent, it may affect
This
your,
one, I think it would give a better answer.
let's calculate. So more recent, it may be something that is more relevant, right? You may have some changes already, and these will reflect the changes, right? The first period may be very long ago, right? 10 years ago, so not relevant anymore. Then the next thing is we also have a weighted average. Okay, so different, huh? Moving average, we simply use like, let's say 3 period, the last 3, or 4 period, we use the last 4. Okay, it keeps changing. Weighted average, we are going to give, or we assign weights to the numbers. Let's say here, they assign a weight of 0.5 to the most recent, 0.3 to the next recent, 0.2 to the least recent, right? 3 period as well. So here we have 0.5. This is for period 5, 64. 0.3 for 58, period 4. Then 0.2 for 55, period 3. Okay, then we find this is 60.4.
So I get more probability for the latest stuff.
Yeah, assign weeks. This one can understand? Okay, you don't need to calculate anything in the exam, okay? But you may need to explain the method. So if it doesn't make sense to you, then we can't do the question. Okay, any difference between B and C? Don't want the answer. Not looking at the answer, but looking at the methods. B and C, B is moving average, C is weighted average. Any difference? Okay, B and C. B is moving average, C is a weighted average. Both use 3 periods, right?
I give weights to the periods.
Okay, so then
But
what?
for the 3 period moving average, it's mostly I don't give higher importance to the most recent. So if I'm talking about 3, 4, 5, 3, 4, 5 are the same in the equation.
Okay.
But if I'm using the weighted average, I think this is very forex like exchange class anyway. So if I use the weighted average, I give weight to the most recent.
Okay, ready for exam. Okay, so that's why I say, so here we give the weights to the most recent data. So this is the latest period. So we assume that this has to be the most relevant. So it's the most important. We will take 0.5 from here. So the whole thing is 1, right? If you know probability, the whole thing is 1. So 0.5, 0.3, 0.2. So it is not equally important. The most recent one is the most important here, right? Then it goes back. As we go back further, then they have lower and lower weights. All right. Any best method? Just this. Any best method? Out of this, let's say we have to compare, right? Let's say the question asks us to compare. We can use the naive, we can use the moving average, we can use the weighted average. So which one could be more appropriate?
Surely the weighted average. However, you're just giving weights depending on the most recent most recent data, which is I think better than the 3 period moving average.
Okay. So one version we fight or we support weighted average, right?
But it depends on the situation.
Yes, it could be depending on the question context. Okay. Anyone supports moving average? So is a good thing or not a good thing? Okay. So this can be for a discussion portion of the question. Okay, so getting you to think, So we explain how the method works. We can explain, you can even produce the results. the next part of the question asks us to compare, right? So they give us these few choices to compare. So we need to decide, for example, which one is more appropriate. So there's no right or wrong, okay? Because they all produce different numbers, and no one, as of this point, period 6 hasn't happened yet, right? We can't tell this is the best method, that is the best method. Even if, let's say, period 6 has occurred, and this happens to be the actual number, it may still not indicate that this is the best method. We may just be lucky, right? That the actual data happens to be the same as the estimates. Okay, you know what I'm saying, huh? Still here?
Yeah.
Probably not. Okay, so in that case, we can give certain reasons why we think that weighted is best, or moving average is best, or you can also support naive method, right? Anyone supports naive method? It could be very fast, right? All this so difficult, right? If you don't have calculator and we don't have I didn't show you all this, you're probably going to spend time to think.
Imagine if we are using the naive method, right?
Uh-huh.
Say we are at number 1, number 2.
Mm.
So if we use the naive method, we say it's gonna be 65. However, in period 3, it became 55. It's inaccurate. So, but if we use the, for instance, the moving average, I don't know
Okay.
how's it gonna be
Okay. So you're going to test back the previous data to see the accuracy.
easily.
Okay. So good and bad, right? We can test the accuracy based on what has happened already. Okay, questions? You remember this few, huh? So coming up for quiz. Easy? Need some feedback. Then I can adjust the questions. Okay, very hard to gauge. Okay, next one. So consequences of the poor forecast. Okay, so short answer question, the structure is the same. All right, so you can start with an intro. Intro can define something. You can provide a context. Then we see how many points we need for that question. Okay, so let's say now we only need 2 points. These are the points, point 1, point 2. If you are doing that portion, let's say for essay, right? Essay, we need 4 points for 10 marks. Then, of course, this wouldn't be enough. We will need to add on more points. Okay, this is just for reference. All right, so don't memorize anything, okay, just to understand the concepts. So let's say first one, poor forecast. We define it to be forecast not prepared very carefully. They are not accurate. They are not reliable. So the problems, the consequences could be things like leading to the wrong actions. So we can overproduce. We can underproduce. Okay, that could be one. It could lead to a wastage of time. We may need to rectify the mistakes done from the first time, from the action taken the first time, right? Any mistakes, we may need to edit, rectify them. Any other points? Let's say point 3. I wouldn't be here talking all throughout, right? I have to talk to you, then you have to respond. Otherwise, like after maybe 5 minutes, right? Like I'm just singing lullaby effectively, right? Everyone fall asleep. So third point. Any problems? Okay, let me move up a bit. Yeah. Some consequences of poor forecast. So you
Work overload.
explain.
From a Scrum perspective, if you are, for instance, planning for the next implementation based on wrong forecasts, then you might be able to do 10 items, for instance, or 10 work packages. However, your real capability is not 10 work packages. You might have work overload. So you might have a lot of work in progress, but actually on read ground, you did not. The finished ones, the done packages are less than what you put for expectations.
Okay.
So you're putting higher expectations that you might not meet. So it's work overload.
Okay, so I phrase that as not having the enough resources to produce, to meet the orders.
Waste. The opposite of this is higher waste.
Okay, wait.
Orders. I think that is a lot of items, manufacturing wise, and you would have a lot of products in the inventory, right? So that's a waste of materials and supplies.
Okay, all right. Okay, should be okay. Okay, next part. How does the number of periods in the moving average affect the responsiveness of the forecast? Okay, so just now we just took 3 periods as it is, right? You could actually use 4, 5, 6, 7, 20, 100. There's no clear one answer. Okay, how would that affect the responsiveness of the forecast? So look at this. If you change in the number of periods, it means referring to how many periods are being used. The more period that's being used, the more data that is dated is being used. This part can understand this portion. This part, you hear? Still here? How many fingers? Wrong. So the more data that we have, right, we're also including very, very dated, outdated data. Okay, next part. With fewer periods, the moving average will be more sensitive to the data that's more recent. It could be more responsive. It could be more sensitive, right, to the recent periods. But if you're using something that is more dated, it may be less responsive, right? Next thing, with fewer periods, the moving average becomes more volatile as compared to a moving average that is smoothed out.
So flatten. The more periods you use, it's gonna look flatten.
Flatten. Okay. So now what we mean by smoothing out effect, right? Let's say here, for example, let's say we have these numbers. And suppose period 6, 100. Period 7, 150. Period 6, 100. Period 7, 120, 150. So this is the number of complaints. As we go on for more periods, let's say 6 and 7, it could be the Christmas period. So more people buy things, more people complain as well. So we are receiving more complaints, for example. So if we only include, let's say, 5, 6, 7, the moving average, then the volatility will be higher.
Spikes will be.
Spikes, right? The spikes and dips. So because here we have a higher number in that period, in only that last 2 periods. Then going to 8, it could be a new year. Then the new year itself, people don't buy as much. People don't complain as much because no one buying as much. So then, if we use all the periods, we are technically smoothing out because you're including those that is lower and also those that is higher. But if you only include the last 3, then those could be where you have recent spikes. This makes sense? This makes sense.
For them.
No one's looking at me anymore. They're just picturing like what's for dinner. So sad. What's for dinner? On a diet, cannot eat so much. Okay, then you need to respond and say you don't need a diet, yeah, perfect. Okay, that's very bad. No one said anything. Next part. Okay, which type of forecasting is better? Qualitative or quantitative? All right. Now, qualitative and quantitative. So quantitative, we are using, okay, this one here is just a version, okay? It's asking you for an opinion. You may disagree, you may go with qualitative, that's okay. All right, this one is just a version. So quantitative is more in terms of the numbers. Just now we looked at quantitative variables. Remember? Let's say we want to forecast the sales figure. What is the quantitative variables that we can use? I want to forecast. Okay, that's good. Okay, quantitative figures. What about the qualitative figure? Qualitative variable. Wow, okay. Yes, okay. Okay. So you know the difference, huh? So quantitative and qualitative, right? One looks at numbers, one looks at the non-quantitative aspects. Okay. So which type of method is better? So quantitative method, we use quantitative variables. What are the numbers or what are the methods involved? Okay, here got time series. Anything else involves numbers? Yeah, so this one, the method includes time series, right? This is the example given. Any other methods also qualifies as quantitative approach. Those that we went through just now.
The periods of the number.
Method.
With a
Method. Okay, so associative regression, right? Okay, that is quantitative. Qualitative method, judgmental. Okay. All right. So here this question supports quantitative. It says that it has data to back up any claims. So it's not subjective, it's not opinion-based. It is also easy to implement because you can get the data, analyze them, everything is straightforward. Okay, collect the data, use in regression, use in time series, and everything quite smooth from there. All right, questions so far? Okay, next one. Explain why forecasts are generally wrong. So first one, forecasts can be unreliable because they rely on the opinions. Now these opinions here, it could depend on which method. So that means if you're using judgmental, it's getting the feedback, right? It's opinion. If let's say we're using a quantitative method, could there be problems due to opinions of humans?
Especially the group bias. So if we have a meeting, and we're asking everybody's opinion and they are outwardly expressing their opinions, they might be affecting others. So somebody might have his own opinion, but due to the group bias,
Peer pressure.
the peer pressure is true.
Okay.
That's why even people in rights tend to even the most peaceful people will suddenly do crazy stuff because of the group bias. It doesn't become it's not an individual mind anymore, right? So group bias and also the ethics. So that's why I built came up with this technique that everybody right should give their opinion. Like so you will talk to everybody one-on-one, right? And will not letting anybody else
Influence.
And actually in scientific wise, when they do researches, they found out that if they do a voting or something with everybody around, that will affect the accuracy of
Okay. Okay. Thank you.
So in my opinion,
Yes.
qualitative controls quantitative.
Okay. Okay.
Because when we have a qualitative forecasting, we are able to know the exact measures about the products or services. So according to that measures, we can have the quantitative action. So that we can measure and we can take it forward. So this is the right way, according to me.
Okay. Yeah, possible.
Rest.
Okay.
So maybe both of them can be used together. Actually, they should be used together because after you come up with a quantitative analysis, you come up with the numbers of risks that you might face. Then you have to use the qualitative analysis risk impact of it to understand which one actually has.
Okay. So probably this is a very easy chapter. So no questions on this. We'll test chapter 4. Even Joe also no response. Okay, continue. Opinions, right? Second one, unforeseen circumstances may happen. So as we said just now, because of a long range, things may suddenly happen, right? That can throw everything off track. So this is a possibility. It could affect your forecast. Okay, so this one just has 2 points. Okay. Any other things that we want to add for here? So any other points that can be added here? Let's say this is a short answer question. This one would be 8 marks. So we require 3 points. So then what other points can be added to this answer?
New entries of products into the market. Suddenly, a new entries to market of a product into a new market and creating a new market space in the market can affect the forecasting presently, which is being planned before for that particular.
Okay.
You suppose, so for example, you may forecast for your product for the next 6 months. So I'm also bringing a new similar product, which is a little bit innovative than your product into the market. And I'm marketing it and I'm creating a market space. So in that scenario, I could achieve the market share presently for next 6 months. So in that particular situation, your forecasting can be affected.
Okay. So in that sense, we'll say failing to take into account this factor. Would that
Yes,
be phrased?
I'm answering for the question. Explain why forecasting.
Yeah. Okay.
So this can also be an answer for that.
Yes.
Because suddenly a new entry of a product into the market can affect your forecast.
Okay. So I didn't take into account your situation and my forecast became wrong. Okay.
Sudden entry of new products into markets
Okay.
can be a barrier.
So I type human.
Yeah, forecasting is for instance, if the United States send a rocket there for 2 million, right? They have never sent a rocket to Mars.
Yes.
Right?
Okay.
So they already know that they need that much of fuel, right? So if they're sending that same rocket or different rocket to Mars, they have never done that before. They can forecast that they need that much of fuel, right?
Okay.
But they cannot mistake. But anything that has a human factor, like sales, manufacturing, anything like that. That's why a lot of companies are going to automation, right? So anything that has, especially for stocks are mainly based on emotions.
Okay.
Right. So anything that has human being as a factor, the equation will always come as not wrong or away from the truth of it. Right?
Okay.
Yeah.
Okay. Can. Okay. Okay. Wait. Too many. I need to type. Okay. So human error.
Human as a factor.
Okay. Then last point, now too many.
Sudden change in government rules and regulations, government policies.
Okay, okay.
But it's never gonna show at 6101, right? Because it's a fact, but humans are very complicated. That's why most businesses are based on humans.
Questions? I missed out anything up to now? Okay. This one,
Brian, any points from your side, sir?
nah, this was the additional point. That's why I pushed it down. Okay. So unreliable, right? There could be too much data. Yeah, too much data, unable to clean, process them, so leading to wrong forecast, right? Another possibility. Okay, let me see if I missed out anything here. Naive, we went through time series. Okay, we look at this first then. Okay, this one, they look at the time series forecast specifically, and we have the different patterns that you may observe. Okay, so for this part, in terms of the question, right, this is not too difficult. So the question here could be more on the MCQ side. Okay, so I dissect for you, huh? So we have essay, short answer, and case study. That portion may not be important for the exam. May not. Okay. So for quiz itself, MCQ 10 questions. So for this section on the time series, the different patterns that you see, cycles, variations, etc., the MCQ may ask. So if it's MCQ again, remember they'll ask you like certain details. Okay, like let's say we are experiencing irregular variations. This one. Okay, let's say the question mentioned they are experiencing irregular variation, which is not a characteristic of irregular variation. A, B, C, D. Then you choose the answer. Okay, so they ask you a very specific detail for MCQ. For short answer question, for essays, of course, we choose these things with a lot to write. Like, let's say the first part here, 7 points. What are the characteristics of a properly prepared forecast? Okay, then for this one, it's quite simple, time series. So they could ask on MCQ. Maybe they will add in with other things into one essay question. All right, so they can say that, okay, let's say now this is a new restaurant. They want to do forecasting for the sales. They want to do forecasting for how much raw materials, how much food ingredients to order. So we are deciding between time series and also regression. Explain these two methods. So we explain. That's the first part of the question. Second part will ask you, in terms of time series, let's say the restaurant manager decides to use time series, what are the different patterns they may encounter? So then the second part of the essay, you may need to use the information here. So this wouldn't be a standalone essay. This could be one part of the question, or they just ask you this for the MCQ. Okay, $500,000, huh? The clue for the question, not the question. Question will cost 1 million. Clue will cost 500,000. Okay, so time series, we may see cycles. All right, this is where you have wave-like occurrences that repeat over longer periods. So for example, let's say spike in the Q4 sales as they enter the holiday season. So, okay, let me see if I can find, okay, patterns, cycle, chart, patterns. Probably something, okay, probably something like that, all right? So it goes up, comes down, goes up, comes down, cycle. Okay, and keeps repeating. All right, so this will be cycle. Then you may have irregular variations. So you look at the whole stretch, let's say in 2020, right? There was this period where the demand for the face mask just shot up because of COVID. So usually you wouldn't have this happening, but because of COVID, no one foresee this happening. It suddenly had a spike in the demand for face masks. Okay, questions? No. Okay, time series, we may also have a trend. All right, so trend in terms of looking at the whole picture, is it going up? Is it going down? Is it going sideways? This one has an example here. Okay, looking at this, these are the numbers of the ebooks sold per year by millions of copies. Okay, this would be from 2010 all the way to 2020. All right, anything that we can describe from here? Let's say in terms of trend, how is the trend like? Okay, so it went up, then it came down. But let's say we plot from the starting to the ending, then we can say it's generally increasing. Right? So there are some years, okay, it spiked a lot, then it came down a bit, but 2020 is 191, right? So it's buying about almost 3 times that of 2010. Correct? Okay, thank you. So it's moving up. This is the trend line. Okay, so from, let's say you can plot from the starting to the end. Is it going up or is it going down? All right, that's the general trend. So that's the trend. Then seasonality. Seasonality would be things like in certain periods. Could there be a spike? Could there be a drop? So for example, let's say here, they mentioned that restaurant. Okay, let's say restaurant. Every time from Monday to Friday every week, right? People may not come out as much to eat. Saturday, Sunday, or let's say evenings as a specific time slot, there will be a spike in the demand. Right? Let's say now I go over to the restaurant, whichever at MBS, maybe not so many people, but maybe at night, maybe on weekends, they will see the spike. And it's always like that every week. So this would be in terms of seasonality. Okay, then the last part here, random variations. There could be other factors that could affect your patterns. There could be other things that could affect your patterns that are not accounted for as well. Okay, this part here, just read through. I would say it's not that relevant for quiz, for exam, but it may ask you for like MCQ, just a small part.